Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
Hey everyone, and welcome. Today, we are going to cut through all the noise you see on trading charts and focus on just 5 numbers. Seriously, these are the only 5 Fibonacci levels that many pro traders actually use, and by the end of this, you'll know exactly what they are and how to use them. Let's dive right in. So let me just ask you a question right off the bat, and be honest. Are your charts a complete mess? I mean, are they just cluttered with a dozen different lines, all these indicators, making it totally impossible to see what the price is even doing? Yeah, I think we've all been there.
Well, what if I told you there's a much cleaner, much simpler way to do this? The reality is you just don't need all that noise. A lot of successful traders focus on what they call the magic numbers, a core set of levels that really drive market decisions. And today, we're going to break them down.
You know, one of the biggest hurdles for traders is just getting lost in all that chart noise. Here's a little secret. Institutional algorithms and professional traders, they're not using dozens of levels. They focus on a core set of numbers that can actually influence where the market moves. And in a way, they're creating traps for everyone else. And that's exactly what we're unlocking today. I'm going to give you the specific settings, the exact levels for sniper-like entries, and, just as important, maximum profit exits. No more guessing, no more clutter on your screen. That's right, we are cutting through all the complexity and boiling it all down to this. There are only 5 numbers you will ever need to draw on your charts. Again, just 5. So let's get into what they actually are. First up, finding your entry. Knowing when to buy a pullback is pretty much half the battle, right? So how do we spot a high probability entry point? Well, it often comes down to 3 key levels, and these are all derived from the Fibonacci sequence, that mathematical pattern you see all over nature and, as it turns out, all over the financial markets too.
All right, here are your 3 key entry levels. First, we've got the 0.382. Think of this as the momentum level. If a price pulls back just a little bit and bounces here, it suggests the trend is super strong, super aggressive. If you wait for a deeper pullback, you might just miss the whole move. Next up is the 0.5, the psychological halfway point. Now, while it's not a true Fibonacci number, it's a huge area of equilibrium where traders often see fair value, which makes it a powerful magnet for price. And finally, we have the most important level of all,
the 0.618, also known as the Golden Ratio. People call this the Holy Grail of trading, and for good reason. Why? Because sophisticated trading algorithms are often programmed to fire off huge buy orders right at this level. It is a high-probability kill zone that absolutely demands your attention. Great, so you've absolutely nailed your entry. But don't start celebrating just yet, because that's only half the job. Amateurs often get the entry right, but they almost always mess up the exit, leaving tons of profit just sitting on the table. So where do we get out for the maximum gain? For our exits, we use something called Fibonacci extensions to project where the price might be headed. There are 2 main targets here. The first one is the 1.272 level. You can think of this as the scalper's profit zone. It's a logical place to take a quick gain where the price often takes a little breather. But the main prize, that's the 1.618 level, our golden target, which often marks the exact point where a move runs out of steam. And this quote just brilliantly illustrates the professional mindset. When you're selling your position at that 1.618 golden target, you are essentially handing your bags over to the latecomers, to the FOMO buyers, who are just jumping in as the momentum is about to die. You're selling at the peak, they're buying at the peak. Okay, so that's all the theory. But does this strategy actually work in the real world? Let's move from concept to practice and take a look at a real chart example, shall we?
I know what you might be thinking. Come on, it can't be that simple. The markets are chaotic. And you know what? You're right to be skeptical. So let's just put it to the test, right here, right now.
So let's take a look at this recent Nifty chart. The very first thing we do is identify this strong initial move up. We call that the impulse wave. This is the move we're going to measure. We take our Fibonacci tool and we draw it from the very bottom of the move all the way to the top.
Now, just watch what happens next. The price pulls back. And where does it find support? Look at that, exactly to the tick, right at the 0.618 level, the golden ratio. That is our high probability zone, and that is precisely where we enter the trade. And then the price just takes off. But the key question is always, where does it stop? As you can see,
It moves up and finds resistance almost perfectly at the 1.618 extension level, our golden target. We enter at the golden ratio, and we exit at the golden target. See? It's not magic. It's math.
So there you have it. You don't need a messy chart. You just need a simple, clean, and incredibly effective toolkit that's based on these 5 powerful numbers.
And here it is, your new cheat sheet. The only 5 numbers you're ever going to need. 3 for your entry, 0.382 for that strong momentum, 0.5 for the psychological level, and 0.618 for that golden ratio sweet spot. And 2 for your exit, 1.272 for a quick scalp, and 1.618 to capture the whole move. So clean up your charts. Just keep these 5. So the only question left is this. Are you ready to remove all that noise, clean up your charts, and start trading with the focus and the precision of the Magic 5?
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.